Hi everyone, this is Realtor Mamas at RealtorMamas.com. This is Brittany Wynn with Keller Williams Partners.
And this is Gayla Bustos with Keller Williams Partners.
Today we have a very special guest. We have Chris Francamont here with North Point Bank here in Colorado Springs, and he's going to answer the most common questions regarding the VA loan.
Our first question for Chris is, what percentage of your business are VA loans?
So working here in Colorado Springs, we do tons of VA loans. Probably 50 to 60% of my business is VA loans, and that's because we have all the military bases here, the Air Force Academy. Colorado Springs is full of veterans. Our North Point branch in the Springs, 30 to 40% of their total business is VA loans. So everyone at our branch is very familiar working with veterans and helping get them into homes.
The next question is, what are the benefits of using your VA loan?
The VA loan, I think, is the best program out there. The first question I ask anyone when I'm getting them pre-qualified is, are you a veteran? Because I love to utilize that VA loan anytime I can. The rates are extremely low compared to conventional and FHA loans. The big perk that everyone talks about is no money down. So you do have to put a little bit money down for earnest money when you first get under contract, but you can get that full amount refunded to you at closing. So at the end of the day, no money into the transaction for a VA loan. Also, there's no mortgage insurance on a VA loan. So since the housing market collapsed in 2008, any conventional loan with less than 20% down and all FHA loans are required to have private mortgage insurance. That's insurance against, in case you default on your mortgage payments, to help protect the banks so that we don't get into trouble like we did back in the housing market collapse. VA loans have no mortgage insurance. Instead, they just have a small funding fee, and that funding fee is actually financed into your loan. So that funding fee adds $5 to $10 a month on your monthly payment, whereas mortgage insurance can add $50, $100, $150, sometimes even more dollars a month onto your monthly payment. So the VA loan is much cheaper in that sense. One other big benefit of the VA loan is that we're able to use debt reduction to help qualify borrowers. It's the only program we can do that. So if a borrower doesn't quite qualify because of a credit card or an auto loan that's almost paid off, I can actually use lender credit to help pay down that debt or pay off that debt to get them qualified. It's the only program you're able to do that.
Nice.
So our next question is, how many times can you use the VA loan?
So there's not really a limit on the number of times you can use a VA loan. It's more about the amount. So the first time you use the VA loan, your funding fee is reduced. Subsequent use of the VA loan, the funding fee is a little bit higher, though not much, just a bit. And you can also have more than one VA loan at the same time. And that goes back to what I was saying with the amount is what's more important than the number of times. So the total amount you can have with the VA loan with no money down is $424,100. So what that means is, if you already have a VA loan for $200,000 and you're moving out of state, you want to keep that house as a rental, you could still buy another house for $224,100 and have that be fully financed with no money down. The combined amounts can't exceed that. Now, if you do exceed that, you just have to put down 25% for every dollar amount that's above that limit.
Awesome. Another big question, I know we talked about this last night, was are you able to buy an income property like a duplex or anything like that if you occupy one of the houses?
Yes, definitely. You can use the VA loan for a duplex, for a fourplex. A big benefit there is if you have prior landlord experience, you can actually use the projected income of those other units to help you qualify. So if you have a veteran who does have prior landlord experience, they want to buy a fourplex that they normally wouldn't qualify for, they can actually use the projected income of those other 3 units to help them qualify for that fourplex.
Okay, that's all we have right now for the VA. If you have any questions, please let us know, and if we can't answer those questions, we will get you in touch with Chris.
Thank you, Chris, our VA expert, for answering all these common questions, and we look forward to giving you more of our business.
Thanks for having me, guys. Hope to be a movie star again soon.
And now we're here with Katrina Stone with Home Bridge Financial Services here in Colorado Springs. She's going to answer the most common questions about loans that you may be able to look into if you're not a VA buyer.
And our first question for Katrina is, what are the differences between conventional and FHA loans?
That's a great question. So I would say the biggest difference between the conventional loans and the FHA loans would be that FHA actually has upfront mortgage insurance as well as a monthly mortgage insurance program. And FHA is a little bit more flexible. It has a little bit more flexibility for each buyer, but it's always case by case. The conventional loan actually does need a little bit of a higher credit score for you to qualify, but it still is a great program.
Awesome. Do those loans have down payment assistance programs? And if they do, what is a down payment assistant?
That's a great question as well. So down payment assistance programs are normally grants. There are several programs out there, and yes, you can qualify for down payment assistance programs with USDA loans, FHA loans, VA loans, believe it or not, as well as conventional. The grants, of course, nothing is ever for free, so there are a little bit additional fees for those programs, and they have a little bit of a higher interest rate for those programs. But yes, it's out there, and you don't have to be a first-time home buyer. That is actually a myth that used to be back in the day in the mortgage world. However, that is no longer true.
So if I don't have perfect credit, what do you recommend that I do?
Perfect credit. So I don't believe anybody truly has perfect credit anymore. But what would you do with perfect credit? I can help you if you first call me. I can guide you to the best solutions possible in order to make sure that your credit score is to where we need it to be in order to qualify.
Awesome. Now, if I wanted to get qualified, what do I need to do?
That's a good question. You call me first. It's a 15-20 minute program or questions, and it's really as simple as your full name, date of birth, social, address history, work history, and of course I need to know how much debt you have in your life. And I'm not talking about insurance or utility bill. I'm really talking about student loans and auto payments, things of that nature in order to qualify for the debt to income.
Okay. And Katrina's going to take care of the tip of the week for us this week. What are the 2 easiest ways to repair your credit?
That's a great question. So I would say the 2 easiest ways to repair your credit quickly would be maybe if you have a friend, a family member, somebody who you can trust, they can trust you more likely. They can add you as an authorized user on their credit card. They would need to have a good credit, of course, in order to do so, and that'll usually help your credit quicker. The second tip is to never close out those credit cards. Even if you got it when you're 18 years old, make sure you keep those credit cards open. You might want to use them every once in a while in order to keep it out of dormant status, but yeah, I would say never close those credit cards out.
Wow, that's a really good tip. Well, thank you so much, Katrina, for coming and talking to our Realtor Mommies.
So we will see you guys next week. If you guys have questions or if you want us to talk about a specific topic, call us, message us, text us. We're here to answer all your questions.
And if we can answer, we have our top 2 lenders here to answer them for you.
All right, we'll see you guys next week.
Bye.